This is the weekend edition, good through Sunday, July 27th, 2014. And my name's Des Woodruff. I'll be your host for the next few minutes, giving you the very best technical analysis here in the markets. I hope to give you some information so worthy that you will just be negligent by not sharing this with your other trading friends and colleagues. On Friday, had a few things took place here. Big drop in the markets with the Dow down 0.72%, but a full percent down on the Russells. Small caps leading the charge to the downside. You had here the VIX up 7% plus. That's a huge spike in fear. Gold uptaking 1%, 1.5% on silver. Now, what we do, and we do quite well here, and this is what we're known for in 155 different countries, is our education. I'm going to teach you a little bit here, so listen up. What we have here is price action on the S&P 500. It's a daily chart. You got red and white candlesticks. You'll notice in my videos I talked about the condensing inside trading candlesticks here, and I said watch for a release to the upside or downside. On this candlestick, you'll see that we went down, but you had buyers come in driving it back up. This is a red candlestick, very bearish, but a white candlestick, very bullish. But it's inside the other, giving us indecision. This is a hammer with a long lower shadow, meaning that there was a bias to the bull side, even though it's a red candlestick. With that, tells us we have a better chance of this rallying higher through this triangle. Next bar went higher, just as we thought might happen. Boom, there's our release. It stops at a resistance point, which is a previous high. This was on July 22nd. And the next day, we pop higher. Now, the problem with this is when I measure the highs to the highs, I draw a line. This candlestick had a slowing. We didn't go up at the same velocity or the same incline as we did with the previous couple candlesticks. Again, this here is on July 24th. Look at it on your candles, on your charts. We had a doji. Usually a doji after a run is a sign of indecision, and that usually means look for a reverse to the downside. I showed this in the video on Thursday saying here's the rolling over, look for a big red candlestick to come up next. On Friday, we get just that, a big red candlestick coming up next. This is how we closed out the week. I want to talk about how this candlestick was developed. It was developed with an open at the top of the candlestick, and it dropped intraday and found support at the rising 20-day moving average, which is very typical, much like you see right here. It came back up, closing right here for the day at 1978. Is it by accident that it closed here? It is not. It closed at a trend line. This trend line is made from 2 points. It takes 2 points to draw a straight line. A swing high here, point, highest close, swing high. We draw a trend line coming through, and we had resistance, we broke resistance, and resistance once broken comes back down and serves as support. I guess it would make sense to take a small moment of time just to share with you the education that we deliver. Again, we do this fairly well. The education, if you're just getting started, I mean brand new to things, take the one-on-one courses. But I highly recommend that you put in your information here because you will be emailed videos that you can download and keep for your personal use right here. Very, very powerful. But you can take them on demand here or do both. A lot of people will actually do both. That's fine. Daily trading videos, that's what you're listening to now. Huge following on podcasts. Thank you guys, especially for all the reviews you're doing. I'm shocked. Over 20 reviews, and that's nice. Chart School, many resources linked to our Chart School as resources. And here's the cat's meow. Amateur stuff here, big time stuff here. So you get our stock picks each week. We do. It's a weekly V newsletter, V for video-based stock picks, V newsletter on bullish and bear stocks. Chat room, that's only for day traders. Or if you want to be a day trader and you have morning hours available to you, check that out. 3 days free, no credit card needed. And 201 courses, this is when you're like, all right, I want trading to be it. I want to do my trading. You can sign up for the 201 courses. Definitely worthwhile. $2,500 value right here. And you get that at a fraction of a discount, because we're not teaching that live. You're going to get videos fed to you, and that's how we can keep the cost down. The mentorship, that's us, and that's where you really team up with us and we help you through your journey of learning how to trade, where we're your coaches, your mentors, those that really helps you along that journey that you're on. And taking a look here at the NASDAQ. The NASDAQ had this bull flag breakout, a bull pullback, finding support the 20-day moving average on the daily chart. Not too bad, really. If you take a look at the weekly chart, we're building a high base, but we're in a rising wedge. Not liking the rising wedge, but we're building a high base, chance of a breakout. I'm long several tech stocks right now. And on the monthly chart on technicals, we're making higher highs, higher lows. All is well at this moment, but waiting for a reversal. It could happen at any time. The S&P monthly is at it's sniffing this resistance line. It's right there at it. It could drop anytime on the monthly chart. The weekly chart on the S&P is just a big time high base. It's like it's wanting to rally higher. Oh, I'll show something with you on the Dow weekly chart. This is the nerd in me, and for you guys who are engineer types, you'll appreciate this. Look at the red, white consecutive pattern here, and it starts right here. It's going to start on June 2014. This is a weekly chart on the Dow. We go red, white, and we do that for 8 consecutive bars. The last time that happened was 8 years ago in 2006. Outside of that, you do not find that sort of length as far as the red, white weekly cadence is concerned. How's that for geeking out? Here's the banks. Now, the banks on a weekly chart is very troubling. Here's why it's troubling. Remember, the markets are only as strong as the financials, and here's the skinny on that. We have higher swing high, higher swing high, higher swing high. That's good. The problem is when the lower trend line gets busted. It got busted here back in the spring. Drops. Again, a weekly chart. We hit, we rally back. If I pull up a Fibonacci retracement, let's see what we're at. It pierced the 61.8. I knew it. That's problematic. Anytime you pierce that, that could be relatively stronger to the bullish side, but it's so weak right now. Here's the problem. We have our first lower swing high, first lower swing low. We're in a defined downtrend as we speak. Now, what we have here is a head and shoulders trend reversal pattern, only when the neckline gets broken. So it has a long drop before that gets broken. We do have a bull pullback at this moment. If I pull a Fibonacci on that bull pullback, we're finding support right at the 50% Fibonacci. That's a big time bullish zone to get a rally on the banks. If the banks do that, the markets will follow and be very strong. The problem is overall we have relative weakness. The S&P and the Dow above the 20-day moving averages. You cannot say that here for the banks. The banks are below the 20-week moving average, actually the 20-week moving average. So that's problematic. If we do get a small bounce there, I will put this line in, and there is your symmetrical triangle, and that's your pinching pattern. That's something we need to watch out for. Gold has been all over the place. Let me first look at the daily chart. Daily chart, we had the rising wedge. It broke down, chopping around. But on Friday, big rally. Big rally. But on the weekly chart, check this out. The weekly chart, symmetrical triangle, bull pullback to the 20 and 50 week moving average, finding support, looking for a rally to the upside. I'll tell you, gold, silver, both looking very bullish right now. We have triangle, it broke out on silver, high base on silver, looking for a break out. On that, a lot of you guys like for me to look at tech stocks. Now, mind you, I'm in a bunch of these tech stocks right now, so there's a disclosure. Like for example, I'm holding Apple, and Apple's on fire, up, 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 and away. This is a weekly chart, daily chart. We were at a resistance point, and then we're breaking out of that. That's great to see, especially for me since I am long Apple. We'll see if we can continue that rally. Amazon had earnings, big drop, huge crush. I got out of Amazon earlier. Glad to be out of that. Facebook, big pop. I got out of that earlier on weakness on the breakdown. So that's I wish I was still in it, but I'm not. Google, on the day, we just keep going higher. Not too bad, as long as it stays in the subtrend, it stays above the moving averages. GoPro is choppy, doing nothing, going sideways. LinkedIn, what I would do to still be in that one. I had a lot of LinkedIn, but as soon as it broke down, started showing weakness, I got out of that, and it's been up and away. I'm looking now for a bull pullback to look for an entry. Microsoft, not looking too bad, kind of a choppy high base or a bull flag starting to be made. Netflix, I'm glad to be out of that. It's just down. Twitter, just a whole lot of choppiness. I don't know what it's doing. It's just churning in these moving averages. You try not to trade within them. You want to be trading above them or below them. And anyway, like I said at the beginning, if this video was worthy and educational to you, share it with a friend right now. There's a share button right around this video, down below or up above, depending on if you're at YouTube or Facebook or Twitter. We're all over the place. Very fortunate to be #1 on Google for trading videos. And actually very few people know this, but I was the very first trader in the world to start doing and publishing and producing daily trading videos. That's me. Started very popular in the UK. A lot of followers and users of our education over there across the puddle. Our Brit friends, love you guys. And anyway, so that's a little bit of inside information. Hope this weekend edition served you well and will help you in your trading. And I'll recap with the S&P. We have dropped here. We need to stay above this trend line, and if we do drop next week below these two trend lines right here, you're going to see a significant drop in the markets. It will be sizable. This is what we call the death hook. If we do drop, a lot of time this will bounce right here, and if we bounce, the markets will still churn higher. So there you go. You get the very best technical analysis right here at Grok Trade, and we appreciate all you guys, and we'll talk to you next week.